Hello everyone, this is Gittler, Head of Investment Research here at FXPRIMUS, bringing my European opening market comment for Thursday, September 29th. Well, there was some big news out overnight. OPEC agreed on a production cut. This is the first time in 8 years they've agreed to something like that. Now, expectations for the informal meeting that took place yesterday were quite low, so oil prices shot up over 5% on the news. The group agreed to restrict its total output to between 32.5 to 33 million barrels a day. The smaller number would amount to a cut of around 750,000 barrels a day from what OPEC said it pumped in August. Now, this isn't all that it seems. First off, they didn't decide on individual country quotas. Who will cut production by how much? That's the hard part. That'll be decided at the November 30th meeting. Secondly, Iran was exempted from the deal. Now, since Iran has said that it wants to increase production back up to its pre-sanction level as a percent of total OPEC output, even if we estimate a 13% OPEC market share for Iran, that would mean it would boost its production by at least 455,000 barrels a day. So Iran alone would wipe out most of the supposed cuts. Third, OPEC was pumping around that much oil from March to June. It's not a major cut in production at all. And when it was pumping that much oil, Brent averaged $45 a barrel, which is pretty much what it averaged before the meeting. So it's not clear this will do that much to shore up prices, especially if U.S. producers just jump in and increase their production in response. Nonetheless, the news is kind of bullish for oil, in that it signals a new approach by Saudi Arabia. Up to now, Saudi Arabia had been intent on maximizing market share at the expense of price. So it could help to boost prices over the longer term. We'll just have to see how OPEC and particularly how Saudi Arabian oil policy develops. As for today's indicators, it's inflation day. We get the CPI figures from Germany and Japan today. In addition, the third estimate of U.S. second quarter GDP includes the personal consumption expenditure deflator, but as that probably won't be revised, it's not likely to be market affecting. Now, Germany's national CPI is expected to show an acceleration in inflation. Germany's CPI is closely correlated with overall Eurozone CPI, as you can see from the graph. So an acceleration in German CPI may be bullish for the euro. German unemployment is also coming out in the morning, but that isn't particularly market moving. Now, later in the day, in fact overnight, Japanese inflation is coming out. That, on the other hand, is expected to slow. The big question, though, is what the Bank of Japan is likely to do about it after they changed their method of operating in the money markets recently. In any event, slower inflation should be negative for the yen, just on a reflex basis, even if people don't know how that's likely to be achieved. For an update on the U.S. indicators coming out today, please watch my North American opening market comment. This is Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.